Hi, everyone, and welcome to the Buffett and Beyond Saturday Market Recap Letter. And this is May 27th, 2023. And these methodologies are based on the book Buffett and Beyond, second edition. And remember, folks, if you want to live on this beach like Jimmy Buffett, you've got to learn how to invest even better than Warren Buffett. And this week, well, the market had a pit bull lull. We're going to show you a chart on that in the middle of the week, which set up a rally right into the close on Friday for the three-day holiday weekend. Now, the semiconductors and the tech stocks are out of control to the upside. Couldn't ask for anything more. Now, the market senses there will be a debt ceiling and expenditure workout that will satisfy both sides. And our weekly stock analysis video, well, Nvidia is the only stock we want to talk about this week. It's leading the semiconductor and tech stocks and heading to the moon, folks. It has been a wonderful, wonderful performer this week. And our ETF video, well, we're going over the top 5 stocks in the semiconductor ETF. You're not going to believe this. They are up an average of 68%, which is more than 800% better than the S&P. And I'm talking about a year to date. So this is only year to date, and we're just starting out, folks. We've got another 7 months to go. However, the retail ETF, well, it's just kind of stuck in the mud, and some of our favorite stocks in that ETF are just, well, not doing as well as the S&P. I mean, they're still hanging in there, but once this turns around and people will start buying goods once again, these stocks will take off, because right now the market, or market participants, you and I, we're buying services, we're getting on airplanes, we're going on trips for the summer. So yeah, it's soon as the people start buying goods once again, these stocks will be off to the moon, and you'll be saying, boy, I wish I would have bought these stocks back then. So we're going to look at a few, and we'll look at more as the week goes on. All right, here's the market. Now, this top red line and the bottom red line are volatility bands named after a fellow named John Bollinger, who was a technician back some years ago. And he says that 95% of the market stays within these bands. The center line is the 20-day moving average. And last week, we were up here, or I should say even in the beginning of the weekend, last week, beginning of this week, and we thought there would be a reversion to the mean, which was the 20-day moving average. Because once a market or an index gets too far ahead of its 20-day, then there's that reversion to the mean once again. So we had a reversion to the mean, and this is called a pit bull low, because we are at the end of the month, and this is seasonality. Well, it happens every month, that the last couple of days of the month and going into a new month, we have a rise in the market, and that's because a lot of money comes into the pension funds right in the beginning of a month, and people will, or money managers will put that money to work right away. And usually there's a low in the week before the end of the month, and we call that a pit bull low. And boy, oh boy, we got a pit bull low. It really went down below the 20-day moving average, scared a lot of people, and then all of a sudden, here comes Nvidia out of the gate, and for 2 days, this stock and the semiconductors and the tech stocks just took off like a rocket, and we are right back to this high once again, this recent high once again. So we'll see what happens on Tuesday, folks. Don't forget the market's closed on Monday. Down here, our intermediate term indicator, it doesn't know whether it wants to go up or go down. It doesn't know whether it wants to give us a sell signal or a buy signal. And this is called braided. It's just like a braid. It twists up and down, up and down. So we want to see this blue line go ahead or go above the red line in here, and then that will give us a buy signal. So we had a little buy signal in here, but boy, it didn't last very long, did it? And coming down and now going back up again. So this is not giving us an indication of a trending market. Right now, the market is trendless, but boy, oh boy, Thursday and Friday really did good things for this market. We'll see what happens this coming week. And when we look at the S&P 500 on the candlesticks, we can see this 20-day moving average. This green line, 20-day moving average, blue line, 50-day moving average. So you could see 3 times this market didn't even go down to test that 50-day moving average. It came down, and then buying came in. It came down, buying came in. Now it came down again this past week, and which was Wednesday, didn't even touch the 50-day moving average, and then went up above to this previous high. And look at this line that goes all the way back here, so you can see where we're sitting with this market. But what do we have coming up? What we have coming up, folks, as if you didn't know, is we have the debt ceiling impasse, which good news is starting to come out of Washington that they're only within $70 billion or so. And so they should iron that out, and we'll get some news there. That should send the market higher. And then in 2 weeks, we have the Fed meeting, and that meeting starts on June 13th, lasts through the 15th. And Fed Chief Powell, of course, will speak on a Wednesday, and he will let us know whether they're raising rates or they're keeping rates the same. Right now, there's something like a 50-60% chance that they're going to raise rates once again, 25% chance that they'll raise it in July or the next time they meet after this June meeting. So the market is still worried about raising rates and that the Fed will be raising rates too much, because we do have a lot of indicators that are saying, whoa, put on the brakes here for a little while and see what happens. And we can see the volume down here. The gray vertical lines are volume on the up days. The red vertical lines are volume on the down days. And you can see that the gray lines have been outpacing the red lines. That means there is more volume on the up days, higher volume on the up days than there is volume on the down days when the market corrects itself. So this is a good sign in here that we're starting to get more volume to the upside. So the market is getting a little bit less cautious and a little bit more bullish, and that's because of this debt ceiling that should work out on the upside, so we don't lose any value on the US dollar, that we don't get downgraded, because that would send interest rates higher, and then that means the debt that we already have, we have to pay more for. So looks like good things ahead. We're still worried about the Fed, so they don't overshoot, and that's the worry of the market right now. And then when we look at the QQQs, same situation here, except look down here. The QQQs have a buy signal, and we've had a buy signal for a couple of weeks in here, folks. And of course, that's on our daily letter, which we put out, and we've had this buy signal on the QQQs for quite a while now, and you can see it has not disappointed us. It is just moving up, and here's that pit bull low that we had on Tuesday and Wednesday of this past week, and then all of a sudden it shot up, and wow, look at this. Yeah, because Nvidia and the tech stocks, the semiconductor stocks, are in the QQQs. Remember, QQQs, NASDAQ 100 minus the financial stocks. So the QQQs are a really good indication of what's happening on the entire NASDAQ index. And for those of you who want put protection, we went out and bought the August SPY 410 put, and the SPY right now is sitting at 420. So if you didn't get this August put yet and you want to be fully protected, now when that intermediate term indicator starts pointing up, some of you, and we suggest this, either you sell another put down here, down below the 410, to cut the cost of your 410 put, or you don't even have all the puts. This is a $135,000 portfolio. You have 3 SPY puts. Now the SPYs are 1/10 of the S&P 500 index, which is the SPX. So SPYs are less expensive, of course, 1/10 as expensive as the XPX. So that's one of the reasons we buy the puts, and they are very liquid. The difference between the bid and the ask is about a penny. So those of you who are not sure about which direction this market is headed in, and we're not sure because our intermediate term index is not telling us which direction the market is going in. So those of you who are more cautious will have 3 puts for every $135,000, and the August 18 put right now is really pretty inexpensive because the SPY is sitting at 420. So we're just 10 points below that we're buying this put. Now, how did we pick 410? Well, that's a whole nother story, but that's from about 12% below the original highs of the market. So in other words, it's like we're buying insurance with a 12% deductible. And that's when people say, okay, I want to be protected. I know it's going to cost money, but in our daily letter, we talk about how to earn the money to buy these puts. So there's a lot more to Buffett and Beyond than you just see here on YouTube, folks. And you can always go to our Buffett and Beyond website, buffettandbeyond.com, and sign up for our 2-week free subscription, and you get that daily letter, and you can see the other things that we're doing here. So portfolio put protection, people like that, they say, I would rather sleep at night. I'd rather be fully invested in the market, but have some protection down there should something happen, something go wrong, or there's an event that really knocks the market down for a couple of weeks or even longer. So, folks, we had a really good week today. It was up, it was down, and then it came back up again. And if you want to live on this beach, and here we are, a little tidal pool in these rocks here, and we're getting the reflection right here, the inflection of this rising sun. So if you want to live on this beach like Jimmy Buffett, you've got to learn how to invest even better than Warren Buffett. Have a good 3-day weekend, folks, and we'll see you back here on Tuesday.